Let's turn back to the markets where my next guest says he's been pricing in risk all year. The Israel-Hamas war is even more reason to stay defensive, and we can see what he thinks of what's going on in Washington as well. Michael Cuggino is portfolio manager of the Permanent Portfolio family of funds. Michael, welcome to you.
Good afternoon, Kelly.
So, the real thing I was going to ask you, you say stay defensive. I'm not sure anyone would quibble with that, but we sort of ask, well, what do you mean by defensive, right? Staples, dividend stocks, utilities. These have been some of the hardest hit parts of the market.
Yeah, I mean, we're defensive in a number of areas, but we also offset that with some growth potential, too. So I think defensive would be a broader strategy of diversification, including names in the equity market that would generally be considered defensive. We like defense names, for example. We like energy. We like commodities. We like natural resources. Those are generally considered on the more defensive side, but we do pair that with more aggressive technology, biotech, and some financials. So it's not a chicken little sky is falling kind of a position. And then other investments that would be considered defensive, although we don't necessarily see them that way, but I understand the argument, would be exposure to precious metals like gold and silver. And in our case, short duration, high quality corporate bonds and treasuries.
Would you be a buyer of Exxon today on the 5% decline on the Pioneer deal?
We own it, and we have a healthy position, so not necessarily, but as an investor, I like the transaction. I think it's an area where over time you're going to see synergies and accretive to earnings. It gives them a stronger position in the Permian. The Exxon itself, with or without Pioneer, is a good dividend payer. We think energy prices are going to remain high going forward. So for total return investor, trading at a below market multiple, it's an interesting position.
I don't know if you want to add any thoughts on what's going on in Washington and the extent to which you think that will affect the markets or not.
Well, anything that goes on in Washington impacts the markets, and I think sometimes people underappreciate that. With respect to the previous conversation in the House, I think this could turn from a ho-hum partisan kind of in the news headline thing to something negative if they can't get the House in order, so to speak, and get a speaker and move forward. Just because in the last week or so, we've got more threats to the United States. And I think the intramural squabbles, the public has less appetite for that when you have other things that are bigger that need attention. And whether it's defense, there's a lot of geopolitical risk out there, which is one reason to be somewhat defensive in terms of investments. But when you have that, when you have big budgetary decisions to make that may impact spending and defense spending, for example,
right, they
need to get their house in order and get on it.
Well, to that point, you like Lockheed Martin. Obviously, that a lot of the defense names are up 4 or 5% this week. But is it such a sure thing that Washington's going to rally here and support more defense spending on a number of different fronts globally?
No, not at all. And that's what continues to create volatility. And that's why investors need to pay attention to what goes on there and adjust their portfolios accordingly.
But you'd still be an owner of Lockheed despite that?
Yeah, because I think in the long term, Lockheed pays a reasonable dividend. It's not that expensive. I do think the United States over time is going to have to increase defense spending. When you look at the geopolitical world, you've got hotspots in 3 major areas right now, whether it's the Middle East, whether it's Russia, Ukraine, and NATO, or whether it's China and Taiwan. And you need to have the resources and liquidity to fund our national interest in those 3 areas potentially, and that involves a lot more defense spending. And I think that is a big decision for Washington going forward, where the United States is not fiscally as strong financially as it was. We've got a lot more debt, 30-something trillion right now, and so financially we're weaker. And we've got to start figuring out how we're going to spend our resources better.
Yeah, $816 billion, and we just showed the defense budget. I think interest costs this year are seen around $650, so it's catching up fast.